So this is the continuation of the previous clip. More than anything else, we are going to continue with the accounting concepts and conventions, and the sixth one is money measurement concept. Now the money measurement concept or the money measurement principle, it states that all the accounting transactions can only be recorded if they are beyond the element of doubt, if they can be expressed numerically, if they can be expressed quantitatively properly without the element of doubt, only then they are going to be recorded. For example, the skill of people cannot be recorded, or the reputation of the business cannot be recorded unless we have, a practical evidence of selling the reputation of a business, just in case of a franchise. Moving on, we are going to now talk about the seventh concept, which is materiality. Materiality means, that when we are talking about recording the transactions, they are going to be recorded on the basis of their significance. So, if an item has a significant value, it will be treated according to its nature. But sometimes, if an item is of insignificant value, it may not be recorded according to its nature. For example, if we are talking about assets, these assets are sometimes recorded as expenses because they are insignificant or very low in value. That is where the concept of materiality comes in, where we say that items of insignificant nature are treated differently from the normal items. Then consistency. Consistency, the word is literally, explaining itself more than anything else here. Consistency means that over a period of time, we are not going to change the rules and regulations too much. We are not going to flex them too much. We have to be consistent. We have to do things in a similar way over a period of time. For example, if something is being taken as an asset, it should be recorded as an asset, in all the periods of time, unless there are some, significant changes in rules and regulations. We are not going to flex the rules and regulations too much, and the policies and procedures, they are supposed to be kept constant or consistent. And then prudence. Prudence, it is sometimes also called conservatism. Conservatism, when we are talking about this concept, prudence, which means being conservative, being careful, we are going to maintain backups or provisions for the future expenses and losses, and we are going to record the assets at their lowest possible cost. And finally, we talk about substance over form. Substance over form, it is a concept in which we, in an event of hire purchase, we record the asset at its cost paid for it rather than the actual value of the asset. Apart from that, we are going to add one more. That concept, I have not written it down over here, but then again it is called matching principle. That's the 11th one. The matching principle it is sometimes also called accruals concept, according to which incomes and expenses related to a certain period are recorded in that period only. That is where the concepts are going to end. Thank you very much.